You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out once again with your favorite options rock stars. Yes, it is time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating The Options Insider Radio Network. Bet you thought I was going to say ever exciting. Nope. Mixing it up on you there, because we're at here episode 850. Episode 850 of the Option Block. So mixing things up there a little bit. Throw you for a loop, a curveball there to start the show. Speaking of curveballs, all sorts of fun stuff popping off today, and an otherwise relatively quiet day on the market, and a lot of weirdos to help me throw those curveballs at you. So let's start off. Let's go all the way out. Let's go out to the hot seat, where once again we are joined by the last emperor himself, Mr. Konstantin Vrandopulo, holding down the Fidelity Active Trader hot seat today. Mr. Last Emperor, welcome back to the program, sir.
Thank you so much, guys. Happy to be here. As always, seems like it's been a little while. I think I haven't been on in a couple of days here. So excited for today's show. Got a few things up my sleeve for you.
It's been at least one show where the other folks there at Fidelity have wrestled the hot seat away from you, but now you are back, sir. So the ongoing battle behind the scenes for who shall fill the hot seat. The last emperor has emerged triumphant. At least again today, and also joining us, he's got limited competition for the Option Pit hot seat. He is, of course, the Rock Lobster. He's got his own problems. He's battling crickets over there and clam pirates, all sorts of craziness. Mr. Andrew GrubHub from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back to the show. How go your many and varied, your legion of battles, sir?
I have to say, you think you go to the woods and everything is okay, but you get attacked still from all sides, Mark. I think just stay in Chicago, stay in that lovely tower of palace you live in the middle of downtown, and fear not for all the things that could happen to you.
Yeah, that's what happens when you leave the ivory tower, sir, is crazy clam pirates and crickets. That's why we stay here in the ivory tower where things are nice and lovely. And we could look across the way at Boeing and watch all their travails and kind of scratch our heads in wonder. And last but not least, I don't know if there are any ivory towers. I don't think there are any towers out there in St. Charles. It's all very flat, very quiet out there. There's no elevating anyone above the others out there and saying it's very egalitarian out there. Of course, I'm talking about Uncle Mike TOSAW beaming at us from St. Charles Wealth Management. Uncle Mike, welcome back to the show. What is the highest building out there in St. Charles, sir?
It would probably be the city's municipal center, I believe. Probably maybe about 10, 15 stories, I'm guessing, but I think it's more of like a monument type of, you know how like you have like the like a tower kind of. It's not like a functional thing, but it's just like a tower type of thing, I would say.
Tower type of thing. Well, we got a trading type of thing in store for you listeners as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's do it. Let's get into what the freaking heck is trading today. And a kind of an interesting, somewhat deceptive day out there on the street. Most of the major indices firmly in the green yet again, so it's been a couple of sessions now of, I guess the worst is behind us, rally-ho mode, earnings distracting folks away from the macro woes everyone is facing. We got the Fed looming on the horizon there as well. All that combining to seemingly lift everyone's spirits yet again today. Everything's up and up firmly in the green. The S&P, actually the Goldilocks yet again, up exactly, just ticked exactly 0.5% here coming into the start of the show. Got the Dow, ever the laggard, only up 0.33%. And the tech-heavy NASDAQ rallying north, up nearly 1% here on the day. So kind of depends, and once again, where you live in the market, how much of a smile you have on your face today. Gold and crude both taking a little bit of a break. WTI back down around that 56 level. Again, 55, but 90 or so out there. And of course, our old friend, ye old VIX cash, once again hovering right around that kind of that 13 level. It did break to the south to the 12 handle. Ever so briefly, got down to, I think, about 12 2/3 or so. Right now, hovering right around 13, 12.95 or so out there. Old friend VVIX, a.k.a. the volatility of volatility. Kind of unched from last show at about an 86.5. You know, we have said many times on vol views, when it gets down to that 70 handle, pay attention because it doesn't usually stay there too long. Not quite there yet, but drifting. And there's enough going on from a VIX movement perspective these days to keep us, I would think, at these levels at the very least. And who knows? We get something popping off, trade war, macro craziness, and then all of a sudden, who knows? VVIX back at 100, dogs and cats living together. Mass hysteria. VXX, our old friend out there as well, also shy of the 20 handle, down about 19.95, puts it off a little more than 0.5 point from where we were on the last show. Coming into showtime, it was kind of quiet. We saw most of the major indices not doing a heck of a lot. VIX had a paltry 80,000 contracts on the tape coming into the start of the show. The ADV is threatening to break 400,000 now. It's at 401. Probably by next show it'll be 395 or something like that, which is pretty light for VIX, especially given what everything else is going on out there right now. SPY coming into showtime had about 1.3 million, so closing in on half of its ADV. The S had a paltry 356,000 contracts, the ADV about 1.3 million. The Qs had done about 315,000, the ADV a little bit north of almost 60 or 75 or so out there. And the Russell, aka WM, had done nearly 200,000 contracts, so that's about almost half of its ADV. So Russell getting a little bit of action out there. But interesting stuff nonetheless, and some certain names certainly popping off out there today. We've got Microsoft in rally-ho mode out there after news that they scored huge $10 billion defense contract out from the clutches of Amazon. Amazon, I guess, had been the favorite for it. You know, if you've been following these stories, a lot of these Silicon Valley firms having some internal quandaries over whether or not they should be bidding for these contracts. Didn't stop Microsoft from turning away $10 billion from the government. People saying that's going to maybe result in some legal challenges because Amazon claiming that maybe Trump got involved to steer it towards Microsoft and away from them. Either way, Microsoft, I should say, up 3%, or three handles up over 2% today. Also got rumors that good old Google and Alphabet, which is popping off after the bell today, they got some earnings coming out soon, maybe in talks to gobble up good old Fitbit. Both of those rallying today as well. 30 handles For Alphabet and Fitbit up 22% or nearly $1, so up to 5.25 on the news. So good news out there across the board. He hasn't been on a little bit, so let's start out there in the land of the Last Emperor. Mr. Last Emperor, I know why you wanted to come on today. I have an idea why you fought so hard to get back in the hot seat today, because yes, today is the best day in stock market history. In case you're wondering, what is the best day to be long the market? Well, at least according to the folks at MarketWatch, which I guess should show you it was a bit of a quiet day because this is what the research they were working on. They discovered that today, October 28th, is the day that on average has produced the best gain for the S&P 500 over the past 70 years. It's up. The S&P is up an average of 0.54% on October 28th. That beats any other day in the 7 decades that they've studied here. So there you go, Mr. Konstantin. That's why you fought so hard. You wanted to come on the best day in market history, sir.
That's an amazing statistic. I don't know how much of it is just chance, but that's pretty crazy going back. I guess, there's some data. I actually did see a chart of it, kind of the breakdown, and it's pretty uncanny. I mean, right now, up 54 basis points right on the dot here, S&P up 16 handles. I got to tell you guys, the way we closed on Friday, I definitely didn't think that it was going to be that easy to get above the previous all-time high that the S&P made. We kind of sold off into the close, and it seemed like there were some weak hands, taking profits on Friday. But what do you know? Good news, I guess, over the weekend is carrying us over some of these previous highs. So we'll wait and see. Huge week, a lot of earnings. The Fed on board, so all sorts of things to look out for. But in terms of what's trading here today at Fidelity, I mean, Microsoft, something that you already mentioned, up 2.25% at around 145.5 at one point. Interestingly, Fidelity clients are definitely trading at 60% of the buy side, leaning there. I thought it was pretty cool that the contract that they won, this cloud services contract that's estimated to be $10 billion over several years, is called Jedi. So I was thinking,
yeah, I saw that too. Who doesn't want to bid on the Jedi contract? Doesn't it sound awesome?
That's right. So I couldn't help myself. I had to look up what it actually stood for. So Joint Enterprise Defense Infrastructure. I was kind of wonder if those defense guys got together and thought what would be a cool name for it. But
Microsoft's finally going to do it. They're finally going to perfect the Jedi mind trick. That's what they're working on. That's what the $10 billion's for.
That's right. What's interesting, Mark, is that Amazon losing in this battle. Stock is actually up 70 basis points, so it's up $13.
I guess they didn't need $10 billion. It's a rounding error for Amazon, right?
Exactly, and I felt that it was pretty crazy the way the bulls defended some of the most recent lows in Amazon post earnings. I was looking at it right after the earnings hit the tape and the extended hours before the earnings call began, and I saw a print on pretty decent volume at around 1620. And, on Friday, obviously, turned around, closed only down 1% versus being down over 10% in the extended hours. So those previous lows made in June got defended pretty hard at around 1672 or so. I mean, you saw just huge volume popping off on Friday there. So the stock, was an inside move at the end of the day, and today it's up with the rest of the market, pretty much in line, even though the news are probably not as good for them as they could have been. So maybe the street was anticipating the fact that they were going to lose this battle. Who knows? The next one that I wanted to mention is Tesla. I think that is a name that's been humbling some bears over the last couple of days, maybe the last few months. I know that you guys keep a close eye on the stock. Stock definitely had a multi-standard deviation move off of earnings last week. So, post earnings, I think it was up 18%, and then comes Friday and you're up out of the gate another 10%. So today it's taken a little bit of a breather, trading at 325 or so. Fidelity customers are leaning to the sell side in this name today, 56% sells to 44 buys. I find Tesla to be interesting because it actually broke in technical terms out of this long-term downtrend that we saw, being established ever since, the January high of around 375. So it broke the downtrend, kind of traded sideways in the very wide range between 260 and 210. And then on the earnings announcement, obviously breaks up back into that 325, 330 area. You got to go back a couple of years, and if you do that on the chart of Tesla, you would see that it is just into all sorts of supply, I guess. It's traded between levels of 385 and 255 for over 11 months in the year of 2018. So it'll be interesting how the stock behaves. We'll keep an eye on implied vol. I saw implied volatility in Tesla get crushed. Right now is actually in the third percentile over the past 52 weeks. 30-day vol at just shy of 43. So about the lowest levels we've seen in there. So we'll keep an eye on this one. Next one, AMD. AMD Fidelity customers are leaning to the buy side here, 56% buys. And AMD is ripping higher, up 3%. That has been the case ever since the most recent low here at the beginning of October. With the rest of the market, they kind of bottomed out some of these chips. October 3rd was the low, and the low in there was 27.43. It's trading at 33.74 right now. So if my math holds up, that's about a 30% gain in less than a month in the stock, and it looks like it wants to attack some of those previous highs that it has made. We've talked about AMD last year on the show, in the middle of the summer months as well. It has been around this 34, 50, 35 area multiple times before. This is, I guess, another shot at it. So we'll have to wait and see. So far, that resistance has held before. So we'll see if the bulls can carry the name over those levels at this attempt. The last one doesn't always come up on the list, but it is being traded today pretty heavily here by Fidelity clients. Bank of America, relatively flat on the day, up 25 basis points. Stock trading at 31.80. This name, the reason why I wanted to bring it up is because kind of quietly, a lot of these financials are actually catching a decent bid. I know that we've looked at the XLF as the S&P 500 sector ETF before, but this stock is breaking out of some previous resistance levels. It did so on earnings. It had a really good quarter, and it just continues to go pretty much, in one direction. I did an overlay this morning when I came into the office between some of these major kind of money center banks, Bank of America, JP Morgan being some of the examples, and interest rates here in the U.S. And as we know, notes and bonds have been catching a bid, or rather, yields are going higher, and bonds and notes are selling off, and that obviously bodes pretty well for financials, generally speaking. Today is just a continuation of that. You see the 10-year Treasury notes as well as the 30-year bonds. The yields on them are moving higher, and that's keeping a bid under the majority of the financials. You got to go out a while to actually find the next available level of resistance, all the way back to January and February of 2018. Remember that was the original time when the market actually took a pretty big tumble down after a spectacular year of 2017. The market is trading at new all-time highs, with Bank of America and some of the other financials are not quite there yet. So they're basically attempting to test those previous highs that we haven't seen since January. So keep an eye on bonds and notes. on how they trade, I think that there's definitely a pretty good correlation, positive correlation between the yields and financials in general. So that sums it up for us here, guys. Plenty of other stuff is moving around, I'm sure, but that's kind of the wrap.
While you're talking here, I was taking a chance to look at some of this other data compiled by MarketWatch. And on the surface, you think it's kind of silly which day is the best in the marketplace, but it's actually not a data point I've actually seen come across my radar before. So we said the best day in the market. The second best day, surprisingly enough, in the market over the last 7 decades is December 26th, so the day after Christmas, with exactly 0.5% to the upside. So the 28th was up 0.54. December 26th, hot on its heels, with 0.5% exactly. And then, of course, the other side of that, you want to know what the worst day in the market is, and it's actually very close to the best day, where the 28th is the best day. The October 19th is the worst day, with off 0.51% over there. So there you go. Now you know the best and the worst days in market history over the past 7 decades. Well, let's go out to that sleepy town of St. Charles. Mr. Uncle Mike, are you going to start calculating all this into your day-to-day trading and really loading up to the upside on days like the 28th and maybe fade into the downside on days like the 19th? Is this a whole new regime of trading for you, sir?
Probably not. But I think that one thing that, there's good and bad to any type of analysis, of course, but the fact that October 19th is the worst day in market history, it might be skewed by a certain day on that, something that happened a few years back on October 19th. And I don't know. I think I read something about some day in October back in the 80s. I forget those.
I don't know what you're talking about, sir.
Yeah, it could be something. But back to the present. I'm just chomping at the bit here. It's driving me nuts that I don't have the microphone. I got to say it. Never before in the history of the entire stock market has there ever been a better day to sell than today. We are at new all-time highs today. It's an exciting day, as any new all-time high day would be. We're north of the 3,000 mark in the SPX. So if we stay here, it's there's no limits now. There's no barriers we need to get through. The walls have been broken down. Now, of course, walls don't mean anything to people who want to sell a lot. So if you're looking to sell, and sell orders outweigh the lack of walls anytime. So please keep that in mind when you hear what I'm saying. But no, it's definitely an exciting day today, just because of the fact that we have a lot going on this week. And looking at some things with which are lighting up my tape. Of course, we have the market in and of itself. Whenever the S&P 500 does make new all-time highs, we always have to take notice of that, respect that, even if you are a bear. Apple, of course, it's getting close to that 250 mark. We're knocking on the doors of that, so that's definitely getting up there. So excitement along those lines. Volatility is lower at this point. Still not to the single digits by any means, but as we used to say back in the old days of 2016, President Trump's not a single-digit VIX president, so it might not quite get down to the single digits again, but it's definitely on the lower end. So for those of us that enjoy buying call options when volatility is low, now could be an exciting time for you. Financials are rallying up roughly 0.5%. I'm, of course, looking at XLF. So as of right now, we have a lot of things that are going to be happening over the course of the next week or so. But for today, to sum it all up, everything is awesome.
Everything is indeed awesome, especially if you're buying stocks on October 28th. Mr. Rock Lobster, have you just had your world completely blown by this data? And do you now have a new worldview and a new frame of reference when you're looking at the market intraday and day upon day, sir?
Day upon day, October upon October?
They don't call it Rocktober for nothing. To the downside and to the upside, it earned its name, sir.
You know what? I have lived through a lot of Octobers, so aside from a small foray into just like private sector real job stuff for about 5 or 6 years, and I gave that up. Yeah, October normally, why? You have the summertime doldrums, and then you come into the fall as that first earnings. There's some seasonality probably to October, I would think. The market likes to rally January through March. But at least today. So if I said VIX is 1298, and if I ask everybody, what is the November expiration VIX 12.5 put trading for right now? And it's only 48 cents out of the money, right? If I ask you that question, you'd say, oh, yeah, 30, 40 cents, something like that. No, it's a dime.
$7. Oh, wait, I'm sorry. Is that not correct?
You were close. It's a dime.
Missed it by that much.
And you can have all you want. So I think when Mike says this is an exciting time if you like buying calls, I agree with him because lower vol means a cheaper call and a call with higher gamma. And those are the kind of options, when you buy, maybe add a little bit more term to the option, you can make some real money buying calls in this market, especially if we're in this uncharted upside territory. From the vol point of view, the thing with here is you've got low cash or lowest cash we've seen in a while, 12 handle after a weekend, only a small markup, which I don't think is too crazy considering how hard they crushed vol at the end of last week. But that you got future premium, we have kind of like a fair value indicator at Option Pit. At this point in the cycle, we should only be, I don't know, maybe $1.25, $1.45 above where the cash is. And we actually have quite a bit more than that right now. So we're looking at, let's see, $2.50 So I think we have at least a half to maybe $0.75 more than normal, because the vol traders are going to keep the bid up in the futures if they can. And right now, nobody's ready to hit the sell button on the VIX futures. They're a little expensive relative to how I look at them, and I just use kind of just historical average. When it gets a little more expensive than the historical average, I wonder why. A little less than the historical average, I wonder why when VIX has like an absolute cash level. So they're a little more expensive. There's, I think, a lot of opportunity in the VIX options, but we're really not going to see how that plays out until after the Fed speaks. And we could see we could see the 11 handle this week, possibly. I mean, you have good earnings. We had a lack of tweets, a lack of trade talk, and almost like it's not even there anymore. So it is possible to see a number like that, and products like VXX and UVXY are going to struggle hard if we get that kind of number, because the reason to keep a bid in the futures, the VIX futures, is going to go down quite a bit. Even though this is a little bit longer cycle than normal, it's the bid. That bid is going to be, it's going to have a hard time holding up. Let's just put it that way. So we got 3 weeks to go, and we'll see what happens. But I think there is plenty of potential movement in VIX options and in VXX based on where the future is. So I don't think we're going to see it, though, until after the Fed speaks and we'll get a better picture. Because, heck, why not lower rates from the stocks at all-time highs? Go for it. Let's see what happens. Let's push this right through this trade war thing. But apparently we have a trade war at an all-time high. So, all I can say is the single-digit vol president is living up to his name, because I think he just put the ball of confusion on everybody.
He's got those powers, the veil of confusion put upon the market by it sounds like if the behind-the-scenes rumor mongering is correct with this Jedi deal, then perhaps he was involved in that one as well. So we shall see. Let's see what's involved in the marketplace. We got a glimpse of what's lighting it up over there on Fidelity. And actually, even though it's a relatively quiet day from a broad volume perspective, individual names are popping off pretty hard. In fact, it takes a whopping 110,000 contracts to break into the top 10 today, which you wouldn't guess given the overall low levels of index volume we're seeing out there. Amazon at that number 10 spot, $110 out there. Number 9, good old Intel, $127 on the tape. Number 8, Facebook, 128,000. Number 7, Roku, a perennial top 10er these days, 141,000 on the tape for Roku. Number 6, Bank of America, 150,000. Number 5, good old AT&T, a.k.a. for the old school guys like the Rock Lobster. They used to call it telephone back in the day, 193,000. I guess they couldn't AT&T was too much to say. I don't know. Telephone seems a lot longer, but hey, I digress. 193,000. Number 4, AMD, 244,000. Number 3, some fruit company you may have heard of, Apple, I believe, 321,000. Usually number 1 today, knocked off the number 1 spot by 2 names. Number 2, good old Microsoft, 352,000. We just talked about them. They're lighting it up. They're also the most biased flow on our list today, with 76% of that 352,000 contracts coming on the call side of the ledger. And number 1, eking out the top spot with a paltry 1,000 contracts, 353,000, is Tesla, with pretty equal flow, 55% on the calls, 45% on the puts. All right, we got to keep on rolling, listeners. It is time to go on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, listeners, we're going to get right into it. Mr. Rock Lobster. I hope you're ready, because we're diving right in. No time to waste. You know, if you've been listening to the show lately, and Mr. Rock Lobster, I know because you've been on it, our to-be-watched category has been overflowing. So we got to pay some of those off, especially now here at the top, because we had a hot one burning a hole in our column there on our last show. You remember these, Mr. Rock Lobster. Those were those crazy Juniper one-day puts that we highlighted last Thursday on the show. Someone came in, listeners, when the stock was, let's see where it was on last Friday. Let's go back out. There we go. Let's see, last Thursday, it was about 24.5. And we saw someone coming out there and buying 3,700 of the Juniper expiring on the 25th, so expiring on Friday. And these were one-day puts at that point. The 24 puts for 57 cents, a whopping 57 cents. That was pretty rich for effectively a binary option with 1 day to go. Of course, they had earnings that night, so someone obviously had some concern about what was going to happen with the earnings. A total of about nearly 5,000 went up, because there was 5,000 open at least going into Friday. So maybe not all of that was trading, but 5,000 were open going into Friday. Let's see here. And it seemed like, as we talked about on the show last week, there was a lot of concern about what the heck Juniper was going to do after its announcement. Mr. Rock Lobster, I'm assuming you haven't watched Juniper. So what do you think, if you had to guess, what do you think Juniper did immediately after its earnings, sir?
Rallied?
You've been doing this for a while, because yes, that's exactly what it did. It rallied a buck and change immediately after the earnings. So this guy who was so concerned, he paid nearly 60 cents for these bad boys. Not so much. The stock closed at about 25 and a quarter on Friday. It rallied up immediately after the earnings. It gapped up about a buck and change, about $1.13, got up to about 25.70 or so. So it really moved far away from that 24 strike pretty quickly. And so these puts, as you might imagine, never really had a chance to amount to much of anything. Weirdly enough, the guy never really even tried to unload them on Friday. I guess he kind of just, maybe a guy like this, probably size underlying holders, maybe he was too happy counting his underlying millions to worry about the paltry money he threw away on these puts. But he did throw away some cash. Only 158 traded on Friday, so there was really no attempt to close these bad boys out. They kind of just washed their hands of them. Obviously, they went out worthless. So just on these puts alone, the block we saw on Thursday lost a little over $200,000, about $211. If you look at all the OI, again, not all of that went up on Thursday, but a good chunk. Then it's closer to around $300,000 that was wasted on these puts overall. So Mr. Rock Lobster, that's a pretty hefty chunk of change to throw away on a one-day roll of the dice. Would you concur, sir?
I would concur. Normally you would see, I don't know, we had the feeling there might be some kind of stock or something, but even then, the stock's back to 25. It's just kind of remember, I don't know if you, but on the P-Coast you used to say those options, that guy got a schmundering.
Thankfully.
They all just went, they didn't go to like a nickel or 20 cents or 30 cents. They're just dead.
schmundering. Were there a lot of old Jewish traders on the Pecos or something like that? It's an interesting term. I like that. I never spent any time on the Pecos, thank God. I couldn't abide starting trading at like 6:30 in the morning. That would kill me.
Yeah, but done at 1 o'clock.
That's what everyone says. Everyone used to always tell me, you're done at 1 o'clock, you can go golfing. I said, yeah, but you live the life of a retiree. You're in bed by 7 p.m. So I wasn't down with the whole Pecos lifestyle. Let's just put it that way. But yeah, these ones, these ones, in terms of the puts, not looking too good, listeners. So someone had a huge axe to grind. They were very excited. And hopefully they're excited on their stock. But you're right, the stock didn't even, it did well initially. It made up a buck and change, so if they dumped it right there, and I haven't had a chance to parse the underlying to see if they did, probably not of that size of an underlying holder. But weird stuff, and the stock kind of petered out after that. So the stock really wasn't great if you had a stock leg, and then on top of it, the options obviously withered away to nothing. So, not exactly a good one. Let's move on to some new ones from today. Let's go back out to our old friend Corning. I haven't talked about them in a while. Ticker symbol GLW. Obviously, they make Gorilla Glass and all that fun stuff on your various phones out there. Trading today about $30.60, up about 7 cents. Not a huge day from an underlying perspective. This is another chart that looks like kind of an old school biotech. It's up and then it's down, then it's up. There's a lot of peaks and valleys on this one, but they're fairly tight. They're all mostly in the range of around 28 to about 34 on the upside. It's about a 6-handle range, but it tested both sides of that multiple times over the past year before finally breaking through it to the downside back in August, getting down to south of 28, got down to the 52-week low of about 26.75. Looks like that was in early September. Then it rallied back up to about 30 again, then sold off again. So it's a bit of a pattern. So if you like range-bound names, maybe Corning was one you wanted to look for. But on the upswing of late, over the last couple of weeks, it's gone from about 27.25 up to where it is today, $30.60. So a little bit of a near-term upside love. So what are we seeing out here in Corning today? It looks like one of the bigger individual stock prints in terms of options out here today was this print in particular. It was a 10,000 lot, so pretty sizable for Corning, of the Nov 30 puts going up for a whopping 95 cents. Again, 10,000 times. This was on the bid. These were surprisingly tight, though. They were 95 cents at a buck for some effectively at-the-money puts here in Corning. So who knew Corning was so tight and could stand up to 10,000 on that bid? That's somewhat impressive for a name that's not usually a perennial top tenner out here. There are earnings. Let's see. Earnings are tomorrow before the open. So this is a pretty sizable pre-earnings trade. So Mr. Rock Lobster, the worm turns here. The plot thickens a little bit with these because they have earnings tomorrow. That explains why that 95 cents is so juicy. But also, this is an interesting one because this is kind of the flipping of the script of what we just saw in our old name there of Juniper. Not quite as short duration. They got a nice month ahead of them on this one. But still, it was like someone trying to draw a pretty aggressive earnings line in the sand here in Corning, sir. What do you say about these?
It is right. This is a stock that actually I don't understand because I followed it for a while. I haven't really bought it. I feel like, okay, they make all this cool stuff for telecom. And I always thought they would launch, and it just never gets a multiple. So maybe this person has it figured out. Just whack out the puts. Just to give you an idea, the volume right now, there's 10,000 puts went up, and the market is there's 20 contracts bid for, and there's one offered at 95 cents. So the 10,000 lot is certainly that would be a big chunk of liquidity going down. Right.
I want to be that one guy. Hey, I want the 10,000 and first at 95 cents, please. Me too. Yeah, Me too for a one lot.
and I feel like this person has a similar idea. I like this because I feel like, that like the glass and like creating all this, like glass is never going to go away. It's like one of those industries. I just couldn't bring myself to buy the stock yet. But I thought it would be kind of one of those stocks that will always be around, so to speak. But maybe they have the right idea. They just whack out the puts and, take the juice and move on. It's almost 3% return on all in. So if you're just if you just want a 3% return on your equity, so again, when I sell puts, I assume I'm going to have to buy the stock, and I just look at the 95 cents. It's about 3% of the strike price, a little bit more, and you take your money and you go, okay, I'll take my 3% to own Corning, and if not, I own it at a lower price. So in a market like this right now, with the way tech is going, and this is like a tech service type business. I don't think it's a bad trade or a bad way to get long, but you got to want to be long, but I think it's a pretty reasonable idea.
Yeah, I think if you come into this one looking to buy the stock there, you're right. This is an attractive one. And I'm kind of with you about Corning. It always seemed like it's the name that's poised to have a lot of upside. It's on every handset on the planet. There's Gorilla Glass 5 and 6 and 47, whatever number they're on now. So everything has got Gorilla Glass on it. It seems like it should be a no-brainer. This thing should be shooting north, yet it never really quite has, as you see by that chart. It goes up, then it falls back down. So maybe this guy's got the right idea. He takes advantage of earnings to get more juice than he normally would from those puts, draws a nice line in the sand. If he gets the stock, he gets it at a pretty favorable level, at least looking at that recent chart. He probably will have some opportunities to dump it higher, and he gets getting paid a decent amount to do it. So maybe not bad. Tell you what, we will come back to these ones too, just to see how he fares, if he ends up owning the stock there or not. And last up, speaking of earnings names, we got iRobot here coming up here. iRobot, ticker symbol IRBT. They make, your Roombas and all that other stuff out there you love, or perhaps love to hate. I'm probably a little bit in the latter category, and I've had a bunch of these Roombas. Let's say none of them. You spend more time cleaning the freaking Roomba than the Roomba does cleaning your house. Let's just put it that way. All right, let's go on to, let's see, where they're trading right now. $50 and change, 50.15. They're up about 40 cents, so decent day. Not quite 1%, about 3/4, 1%. This is the name that a year ago was trading 77.35. Then it got up to as high as 132. Wow, back in March time frame. And then again, looks like it threatened that level again back in April. So it had a good late spring getting into summertime there. Then it kind of sold off hard, and the earnings in April got down from 132 down to 100. Pretty darn quick in the span of a session or two. So it lost roughly a third of its value pretty much overnight out here. So rough earnings in April. Then it was kind of vacillating around that 90 strike for a while. Then it sold off again from 92 down to 74 back in July. I'm guessing on another announcement. So this thing has a recent history of shocking pretty hard to the downside. In the span of two announcements, it lost roughly half of its value. That's pretty rough. Then it's been kind of drifting down from that 75 or so level all the way down to where it is right now, $50. So looks like maybe somebody is, we already saw the announcement again recently. It was out last week. It was on the 23rd. Actually took a big hit after that one as well. It took another $10 hit. So this year has been a rough one on the earnings cycle for, I guess go figure, $600 autonomous robots that don't really clean that great. Maybe it's a hard time moving those out there. Let's see what we saw out here from an options perspective today. Looks like some put love, some post-earnings put love, which, if these charts are to be believed, maybe the horse is out of the barn already by this point, but we'll see. It's the March double puts, aka 55 puts, going up for $8.70. That's a dime off of the offer there. 6,418 times over there on the Philly. These were late, though, by the way, and they are opening. This is new positioning here. So Mr. Rock Lobster, this is the name that looks like it's been, I think the technical term is crushed over the past few earnings cycles. Let's see, a 30-handle sell-off, about a 15 to 18-handle sell-off, and then a 10-handle sell-off all over the course of the last three announcements. And then now someone's coming in and saying, you know what, I think I might want to buy some puts. At least he's giving himself some time. It's going out to March, but he's buying, and these are double puts, too. These are meaty. So this one, all sorts of head scratching here. What do you think about these, sir? This post-earnings put love in iRobot?
It's to me, this is another company like Fitbit or GoPro. I guess, or I'm just waiting for the Tyson guy to come up with a robotic vacuum cleaner. Oh, Dyson? You mean Dyson? Dyson, that guy. The smart guy. This is a tough, volatile stock. It was $100 and something bucks. It's got clipped in half. I always thought when we first saw these puts, somebody could just be rolling the puts. That was kind of my first possible take on them, but it seemed like just somebody buying them and thinking the stock's going to go lower. And at least as of right now, it kind of looks like they're right. It's hanging out right there, waiting to gain a little bit more value. But another, 14,000 traded today overall. So it's somebody wants them. So it trades at a pretty, again, the fundamentalist in me. It trades at a decent multiple for a high-tech robot consumer electronics company. So it's just right now, all I can say is the person's right, and they certainly want to spend real money. This doesn't feel like hedging dollars. It feels like I want to just short the crap out of the stock, and I don't want to have to deal with with any other risk just associated with short stock or margin or buy-ins or anything like that.
Yeah, this is serious dollars. You're right, because a total of 14,000 have gone up here today. So size money. Also worth noting, there are some other puts. The June 50 puts also went up, but only 5,500. So if they are rolling or doing a diagonal, it's a bit of a funky ratio to it. So they do.
Yeah, they want it.
Yeah, it's a weird one either way, which makes it fun. But of course, speaking of fun, you know what's fun on a Monday? It's time for a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's Monday. Time to talk some strategery. We got the Last Emperor to help us do that. Mr. Last Emperor, one of my favorite positions to talk about out here, whether it's on this show or definitely on our advisor show. I've called it in the past the holy grail for RIAs and asset managers out there. It is, of course, the collar. One of my favorites, and I know for our audience, a lot of their favorite out there as well. So, Mr. Last Emperor, regale us. Are you getting a lot of calls about collars these days?
Well, not a whole lot, but I got a couple, so I thought I'll talk about it. And I had, kind of the idea of what specifically a particular name that me and the client talked about. The collar, right? So in essence, a multi-leg strategy, obviously, here at Fidelity, you would be able to get that strategy put onto your account if you have level 2 options trading, the ability to buy puts and calls and sell calls on the position that has already been established in your account in terms of equity. So you don't need a very high options level in order to get this strategy put on. But one of the things that we as maybe technicians think about when we enter into stocks, if you have a trading idea and you, let's say, have analyzed the chart of the stock and you have a particular view of where it has the potential of going up to. Where you would be taking profits, as well as what your risk potential is or your risk tolerance is on that particular underlying. So, if you are in the business of putting in what we call bracket orders, which means you're buying the stock, and by buying the stock, you're triggering a sell limit at the top at your target for a profit, as well as a stop loss at the same time, down below at your risk tolerance. That bracket, right, is going to, on paper, protect you from, losses below your stop, and it will get you out at the limit of where you're willing to sell at that moment in time when you're entering into a position. Well, what is the problem with that sort of a trade, especially if you carry positions overnight, right? The issue is that you have gap down risk. Whether it's a stop loss down below or a stop limit that you're actually putting on, the gap down risk is something that you cannot control against, right? These bracket orders or even regular stop loss orders are actually no good for extended hours trading, right? So an example of a gap down risk was most recently Twitter. And I know that we've had plenty of gap ups, but, if you're long something, you don't really worry about the gap up. You're worrying about the gap down. So in Twitter was an outsized move post-earnings to the downside. I believe that it was in excess of 25% of the downside. And if you had a stop loss in there, it definitely wouldn't have protected you, right? The opening rotation at 9:30 the following day was already down close to 22.5% to 23% from the prior day's close. So is there a strategy that can actually protect you from that gap down risk where you have a specific profit target in mind, as well as, a specific level of risk tolerance on the downside on a long position or if you are actually short the stock, doing the opposite of that. Well, certainly there is, right? It's called the collar strategy. So you are selling a call on a long stock position that you're establishing above, at say, your target price for a profit, and you are buying a put down below at the level of your risk tolerance. What does it do? Well, if a stock gaps down, the put in that case is actually going to be trading in the money, right? And it's going to incorporate that gap down, the amount, right, into most likely its intrinsic value at the time. So this collar strategy is essentially protecting you from gap down risk. It is obviously sacrificing upside potential on the underlying. So your strategy view should be, bullish to neutral. You definitely wouldn't be doing something like this on a stock that you think is going down. I've had plenty of those conversations before as well with clients where they say, well, I own this stock, and I want to go ahead and do, a very tight collar right at the money where the stock is currently trading. I'm going to sell a call. I'm going to buy a put. Well, by doing so, and considering the fact that you're able to do it for hardly any cost or zero cost, a costless collar, what are you really doing? Well, you're creating a synthetic short against the box, right? You're long the stock, and you're creating a synthetic short by going along the put and shorting the call at the money. So the question always is, why go through all that trouble if you can actually take some or all of the position off the table if you're in fact bearish? A lot of folks bring up the fact that, well, I've held the position for a while and I've had gains in it, and I'm not really willing to actually part with the position because it's going to create capital gains. Well, for those folks out there, and I know that this is not a options taxation show, but I always refer people to the characteristics and risks of standardized options. It's a good booklet that you could find in the PDF format from the Options Clearing Corporation's website. It's chapter 9, and it's definitely worth a read. But we're not, here to discuss the taxation part. It's the strategy piece, right? So effectively, if you are the type of person who is either already, has the position, not willing to part with it, or you're putting on a brand new long position and you have a 1-to-1 risk-reward ratio, right? That would probably be an appropriate strategy for you. Why do I say 1-to-1? Well, because if you are selling upside calls and you're buying downside puts, let's say that for a moment we imagine that there is absolutely zero vertical skew, meaning upside calls in volatility terms cost the exact same amount as downside puts. Well, if that was the case and you're doing an equidistant collar, then you're effectively not paying anything for it. The more interesting part is obviously dissecting whether or not there is actually skew and how you're constructing that collar. It doesn't always have to be absolutely costless, right? If you're, giving yourself a little bit more room on the stock to the upside and you are having a tighter risk management technique on the downside below maybe a trend line or a support level, that actually is most likely going to cost you more, right? Because the put is closer to where the stock is currently trading. So those are the things that you should weigh. I think that in the majority of stocks, especially, large market capitalization stocks, if you're doing it relatively tight to where the stock is currently trading out, a month, a couple of months out, you're not going to see crazy skews. There are names that do have crazy skews, and you're going to be able to see them as soon as you mock it up, as a trade, whether or not it shouldn't cost you anything, and all of a sudden you see that it's costing you a whole lot. It means that the puts are a lot more expensive than calls. Well, there is vertical skew to the put side, right? But I just want to, kind of emphasize and underline the fact that as technicians, we generally lean towards creating setups and strategies that allow for better odds of us actually making money. So you will be looking to maybe risk 1 to make 3. And if you're thinking about those same types of techniques and you're thinking about collars, understand that they're not going to be absolutely costless. You have to give up a little bit of upside to pay for that protection on the downside. Hopefully it makes sense. If you have any questions about it, of course, we're always here to answer them. And we can even mock up a trade, simulate it, and walk you through how that particular strategy is going to play out if X or Y happened.
All right, listeners, that music means we pretty much are up against it here, so we're going to have to do a quick combo of Around the Block. And what we got working that may interest you really quickly. I know a lot of you love your earnings. A lot of big names popping off this week. Today we got Beyond Meat and Alphabet. After the bell, if you're wondering what they're pricing in from a straddle perspective, all hot new earnings move reports hitting the site today. So go hit it right now if you're listening to this, or whenever you're listening to this. So Beyond pricing in, let's see, they're at $98. They're pricing in about $13.25. In the past, they moved $25.25. So a little light, but then again, not a lot of data points for Beyond Meat. Alphabet, they're pricing in about $37. Again, they're at $12.60 at the time of this report. And in the past, they've moved 48.5. So also a bit of a theme out there. Let's see. Tuesday, we got Pfizer, GrubHub, AMD, all those names. Wednesday, got Apple and Facebook, Lyft, a bunch of names you guys like, CME, Starbucks. Let's look at Apple here really quickly. We got to scroll down a little bit to find Apple. Where was it? Here it is. They were at 246.5 at the time of this report. They were pricing in $864. In the past, they moved about $10.5. So getting a theme to a lot of these straddles. I know I certainly am. And then the rest of the week hot as well. Thursday, we got Pinterest, Funko, WWE popping off on Thursday. Friday, Alibaba, Chevron, and Exxon. Let's go back around the horn. Let's go back to Uncle Mike first, sir. What is on your radar for the rest of the week? And if folks want to learn more about St. Charles Wealth Management, where should they go? What should they do?
Watching everything. Curious to see if the Fed will lower rates at these levels. And, of course, if you want to find out more information about what I do when I do collars, contact me. My information is on my website, stcharleswealth.com.
There you go. All right. And Mr. Rock Lobster, sir, what are you watching for the rest of this week? And also, if folks want to learn more, maybe they want to check out your newsletter, where should they go? What should they do? Oh, Mr. Rock Lobster, I think he has muted himself.
No.
There you go.
I had a client call me just a second. Go to optionpit.com, and what am I looking for this week? Lower vol, and the Fed loves everybody, and the market goes higher. That's what I'm looking for.
The Fed loves everybody. Check it out for yourself. Check out his newsletter. Maybe you want Rock Lobster to text you, I should say, throughout the day. OptionPit.com is the place to go. And last but not least, Mr. Last Emperor, folks are intrigued by what you're talking about with callers. Maybe they want to learn more. Maybe they want to reach out to you guys directly. Where should they go? What should they do?
Absolutely. Fidelity.com/options. You can open an account, obviously apply for options trading right there. Fidelity.com/coaching for all the things that the strategy desk actually does, the coaching sessions that we do on a daily basis in small classrooms. You get to see us on camera and say hello. So, of course, as always, we are open to direct conversations with clients as well. If you're already a Fidelity customer, give us a call, ask for us by name. Be a pleasure to work with you. It's always a pleasure to be on the show, guys. Thank you so much for having me. We'll see you next week.
We will see you guys, actually, not even just next week. We'll see you guys in a little bit. We'll be back in about an hour. If you need a little more derivatives analysis in your life, you're thinking about a little bit of crypto, some vol, some term structure, all that good stuff, well, we got you covered. Crypto Rundown coming up in about an hour or next on whatever device you're listening to this to right now. And then coming up later this week, we'll have the advisor's option hitting the network. Already recorded that one. That one's in the can. Then we got, of course, OPR and all the other fun stuff. Some good interviews, I think, coming on. It is FIA week here in Chicago, so we'll be having a lot of folks probably cycling through the studio here as the entire derivatives industry comes to Chicago for a week. That's always fun. Then, of course, we'll be back together here on Thursday for a little bit more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.